Let's talk a little bit about the market as it now stands and looking forward. Of course, the last 6 months and all of the things you articulated through that period, we saw WTI crash into negative. We saw demand destruction, 20 million barrels. We saw OPEC react with a massive supply reduction. And now at the end of the third quarter, we kind of came through a stable period of $40 oil, Brent and WTI, and OPEC managing a significant reduction off the market, OPEC plus, I should say. I welcome your views as to where you see things now and through to the end of the year, the market balance. Does inventories get drawn down? Do prices move or do they stay where they are? What's your sense of supply-demand balance outlook?
I wish I have clarity on the way forward. The problem I see, there are many uncertainty in different issues. So from the supply side, recently we see Libyan productions coming back. OPEC did not make their mind on the cut or maintain this current production. So the supply, shale gas is another issue. So these are issues related to the supply side of the problem.
Yeah.
On the demand side, you see what's happening now, especially in Europe. You see this is a second wave of COVID-19, and countries are going back to locking down their economy. We've seen a stress refining margin, and we've seen a lot of refineries either they cut their production or their refining capacity to 50% or 60%, and also we saw a lot of refineries just merely close the whole refinery because margins are very distressed. So this is from the demand side. Of course, if you put the geopolitics, the U.S. election, and the stimulus package that the U.S. economy is looking to inject in the economy, that will put another pressure how that will be reacting. Needless to say, whether the magic will come from the vaccine or the medicine that will comfort the people to go out and unlock the economy, that is yet to be seen. So it will be extremely difficult to see where we are going. I mean, we thought, mid-June, July will be okay, coming back, vaccine will be there. Now we're talking about end of December with commercial production will be on probably second half or first half 2021. Been hearing in the news that, economy are locking down and declaring emergency situation until April, May next year. So these are a lot of things. A lot of issue is uncertain, which is make it very extremely difficult in my mind to see when it comes.
I mean, just despite all of that uncertainty, which has been present for a while, oil prices have been stubbornly, boringly stable.
Of course, there is not much of changes, I will say, and what stimulated the prices is the investors or the trading around, and traders will not take a lot of bold positions with a lot of uncertainty. So they may they stay on the side, and that's why you see it's been stagnated between, I would say, 38 to 42 to 43. That's where the trading is being taken care of during, I would say, from June, July, August, September. So I think it's been in that level because we see a reduction from the supply side as well. I mean, the shale gas is being down, and people are looking at cutting costs from the production. Of course, the typhoons or hurricanes in the U.S. helps a little bit because of the cutting the production in the U.S. Gulf. So there's a lot of abnormality in the market that kept it at that level. But what we have seen from Q2 to Q3, there's definitely a reduction in the inventory. So we see that the inventory level is going down. The contango is not so steep. So it's a very marginal. So this will keep the market, in my opinion, within that range, unless we have big news to either move it up or move it down.
I mean, one of the surprising things I would say, and I'd welcome your view on it, is the demand side has been relatively resilient in its recovery. China has been pretty solid and importing record levels through this period. Even the US economy, despite all of this turmoil, both election and COVID, is continuing to have a relatively slow but steady recovery. So the demand side is maybe something better than one might expect.
I mean, if you look at if you compare it with the initial lockdown period, where people have no idea about how to manage or how to react with the pandemic, they don't know. Now, as we pass with the time, people understand the behavior of the virus. People know how to keep themselves safe. If you go to any places, they already have been adopted the distancing precautions and the social distancing is being taken in certain precautionary, and people will actually start to move around. Now, the question is now what will happen today or next week or the following week, seeing the scary number coming from Europe. 50,000 plus in France and 20,000 plus in the UK. And these numbers are getting back to the similar level that we have in March, April time.
When you think about where you look every day, would you not be more looking at where is Asia going and where is Asian recovery and outlook and get more confidence from that than Europe?
Well, I would say in Asia, people are more disciplined in terms of, obeying to the rules and sticking to the rules. Look, Japan and Korea and Singapore and these places, the number are very controlled in a manner. I will not talk about China, but, the number seems to be life in China is getting back to normal. Economic activity is back to normal. I don't know how that will behaving in how we're behaving in Europe with the second wave of the COVID-19. So I don't know really how, but I mean, if I see the same behavior like what we did, it will take maybe 2 months until see a slower rate of infection, and that all depends on how that opening. And for example, I will say, if this is continue in Europe today, then the travel business and the aviation business will be hit. Yes. And consequently, the jet demand will be very weak. Mobility of people will be less. So the diesel or the gasoline will be impacted. On the other hand, because people are staying in home, they will consume more energy, more electricity, more LNG. So there's another balancing factor in that thing. But at any rate, I think what will swing the situation is whether there is medicine to cure the COVID or there is a vaccine. And everybody's talking about, it's coming, December is coming. So
Santa Claus is coming.
So we'll see.
In the meantime, refineries, which you mentioned, have been facing some really challenging times, margins, low throughput. I'm wondering, what's your diagnosis for refiners and the outlook for refining going forward?
Being in this business, refining business is always behave that way. It's a cyclical business. When the margins are good, everybody go and build refineries. And then there will be a cycle of overcapacity. And it will take time to correct that overcapacity, mainly by shutting down the less efficient refineries, and then the more efficient will stay. But what we have witnessed this time, probably I would say two events. One, Q4 was very bad for low conversion refineries because the fuel oil was extremely under pressure because of the IMO 2020.
So Q4 2019, you're talking about?
Yes, yes.
Yeah.
And that actually hit the less efficient refinery a quarter or 2 quarters ahead of what is being done now. Second, typically refinery, the most sophisticated refinery, they integrated with some part of the chemical integration, and the chemical integration, it's counter-cyclical with the refining. So if the refining business is down, then the chemical side of that integration will do kind of hedge and improve the profitability of the asset. So what happened during COVID-19, you have a double whammy, lower margin driven by the jet fuel and the diesel. The middle distillate was extremely low. Normally refining will see double-digit margin, and now you see jet fuel is cheaper than the crude itself. It's a negative territory. Same thing applies for the diesel for quite of time. And the other thing is that the aromatics complexes that they use naphtha to produce paraxylene or benzene, it's at a very low record in terms of margin. So actually you probably suggest that to produce the naphtha instead of convert it to aromatics. So the combination of all of this show a very negative margin that the refinery cannot actually run at full capacity. So what happened the second quarter? Second quarter is the low prices of oil helped the refinery to generate some money. But when it went up to the level of the 40s, 35 to 45 level, with a low margin, that will suggest that the refinery need to cut down their capacity, and they run at a minimum rate to just ensure there is not much of losses in their business. So I would say that refining business going through the low cycle.
A lot of capacity coming next year, particularly in China, 1.5 million barrels.
I understand, but I didn't think the business is sustainable at these rates. Market need to correct whether lower or a discount on the crude to make the refinery margin higher, or there will be a pull from the demand side and acceleration of the utilization of the refineries, including the catching up with the demand surge. That will help the refinery to go to the profitable, I say, territory for them. But for the time being, there is a lot of pressure. Refineries need to consider either to cut down the production, and once you cut down the production, we have seen, like, the Korean refiners usually is an export system, and now they are cutting their throughput because it is negative. And that is the correction that we are talking about. It's about capacity, and less efficient refinery will cut down, and they will be probably forced to go out. And that is where we are going. And look at the European refineries.
How do you interpret the Chinese at this time in that regard? The scale of their imports, the scale of activity of the refiners?
See, China, because the government regulate the local domestic prices. So in China, if with the low oil prices, the domestic price of the gasoline and diesel are very attractive for the local refinery to produce high throughput. But when at a higher price, they will lose in the domestic market. So China has a different economy, I would say. So they are probably making money out of the domestic system, which is nobody can get in that market except the Chinese companies. For importation, they are actually exporting because of the capacity they have been built. That will put a pressure. And we've seen there's a lot of gasoline cargoes coming from China last year and second quarter. but it dipped down, and now it's a lower production compared with the same period last year.
Their ability to export.
Yeah.
Yeah, that's whether it's what they do with all this crude. Your thoughts on that? Do you think it's still most of it going into storage? What is your thoughts on all of the crude?
It will go to the, of course, they build their storage capacity, but also the local economy, the China economy is also, you see the figure for their GDP growth for that quarter. They are at what, 4.5% on the GDP. They are growing.
Q3,
the rest of the world, yeah, and the rest of the world is a negative territory. They are growing their economy, and that is how they fuel their economy.
Yeah.
This is why they need energy to fuel their economy.
So you'd be optimistic that China demand holds solidly enough through the fourth quarter into the new year?
I will say yes.
Yeah, there's no reason why it would. I mean, it's been at this for 9 months now, most of the year. As you go into the new year, with the China New Year coming up, it seems to be a big demand draw. The question then becomes, of course, OPEC Plus faces the decision on what to do on January 1st with the current agreement to add 2 million barrels a day. Do you think the market can absorb that, or do you think there might be an adjustment?
Again, as I said earlier, it all hinges on how the global economy will open, how the US stimulant package, if it's get approved, how that will accelerate the economic development. There's a lot of demand issue that I believe that OPEC will take in their consideration.
They sort of don't really have much more time in essence, do they? I mean, if you think the next JMMC meeting is November 17th, the term to customers for January in Asia would have to be declared probably before then.
Yeah, I mean, you will see that if you see the refiners are cutting their throughput, that's a good indication that the market is not there for to increase. I mean, any better increase, it will be creating a diminution of economy, or it will not help the prices. What they call the diminution of returns. I mean, any better that you put, it will decrease the prices. So I think they have to look at the supply and demand. Inventory is another factor they need to consider as well. And we've seen that there has been drawing a lot of the inventory, but is it driven by other factors like the hurricane that took place last month, and it's coming in the way. So that is being drawing. But again, if we see the refinery or the refiners running is being reduced, then again you are having an issue with the demand. And of course, if you look at the jet, if you don't have the aviation business coming back, so what we will do, we'll take the jet and we dump it with the diesel, and that will put a pressure on the diesel. And today, see, most of the refineries are dumping the diesel with the low sulfur fuel oil. So there's and
there's so many. I mean, when you think about the supply side, we're in a world at the moment where certain members of OPEC are not producing anywhere near their Venezuela. Libya is just coming back. There are countries there that could add a few barrels under different political circumstances. Well, that's a very good place to wrap up. Ibrahim, thank you so much for being on this week's Halftime Talk. Really great to have your insights 6-7 months after this COVID turmoil. So thank you.